Hi there, I'm Mark Sebastian, and this is the Option Pit Trade Idea of the Week reminder. This is for educational purposes only. None of this should be construed as investment advice. If you trade off something I'm talking about, it is your problem. Consult your financial professional because options have risk. So uh, let's talk about the market. Well, we're off 48 bucks, 2.5%. If you look at a tick chart of today, you can see we've been down as much as 60, and we've been kind of in this range now. If you look at the last hour or so, kind of creeping a little higher, but really just staying between down 45 and 53 the last hour. All right, VIX, after being pretty stubborn all morning, kind of broke out. Now it's backing off a little bit, but not that much. All right, so we've got a nicely firm VIX and a market that's been, meandering about a little bit, maybe creeping a little higher. Well, what does that mean for me? Well, I don't see that lasting. I think that, we had the VIX briefly over 30 today, not really, but briefly on a print. I think it's going to go higher. I do. All right, and I think the SPX is going to go lower. Now, my fund has different positions, some in SPX, some in VIX, so just fair warning. But I think that we're going to see the SPX potentially go lower from here. I think we're going to see it close below the lows from August. So I'm shooting for another trip back down to 1860. Futures traders will tell you the low from the August low was 1830. And I think we could get there. So I think you'd see the futures get to 1830. And, then some, who knows from there, some potential ugliness. But, the way everything sets up, none of this looks super healthy. Although it's nothing like what we got back in August. Much more controlled. And if you look at volatility, you can see it's just been kind of a slow creep higher, as opposed to a 3-day spike. But I think one of the nice things is that I think this will be a more sustainable vol rally, potentially. I do. And so if you think a vol rally is coming, well, you can see VXX is having a nice day, but look at the pattern here. And if you look at VIX futures, and I know I did this last week, but there's a reason. VIX futures are super backward. All right, you got 2460, March is 2370, April 2320, 23, all the way out to July. Futures are backward. That is ugly. All right, and they can try and keep VIX in certain levels, but I just don't see it staying there. And so, despite the VIX getting a little bit of a bid here, or the S&P getting a little bit of a bid here, I think this is an opportunity to step in and buy some calls. And yes, vol's high, but I think that things could go much higher. Obviously, you could do a call spread that's cheaper than an at-the-money call, but what I would do, especially with a little rally here, I'm going to let the trade come to me. Pay 170. Well, pay 172 and see if I can get the trade to come to me. Just small, just so that I can keep track of the score. But I like owning. I think I like owning calls in VXX because I think vol is going to move higher. That's just part of the way I feel about things. And that is where I'm going to be trading things from here. All right. My goal is to sell this at about $2.50, maybe $3. And that's where I think it could go. Who knows? Maybe by the end of the day. All right, folks. A reminder: we have an event next week on Saturday, adjusting option positions and managing risk. If you are a professional trader looking to get good at adjusting positions or managing risk, or you're a new trader, kind of wants to know what they need to learn, I think you'll get a kick out of what we're gonna show here. So you may want to jump in on that and get signed up. It's $147 instead of $247. That's inexpensive. Go to optionpit.com/risk, RISK, and you can sign up right there. It's also where you can watch a replay of my webinar from last week, Principles of Risk Management. Okay, folks, I hope everybody has a great afternoon and a great weekend, and I will talk to you soon.